Today was a wild day out there for stocks after we had the AI news this morning, the disappointing job data. Are we setting up a double trap situation? And make sure you watch to the end so you understand all the critical levels. Now, right out of the gate this morning, we saw news come out and we saw the S&P come crashing lower, which actually helped stocks have a lower open. And what that news was, it was all about Microsoft. And there was a rumor out there that Microsoft's AI software sales quota had been lowered and Microsoft came crashing down. The S&P 500 came crashing down as well. However, a little bit later on, Microsoft stock sinks on AI product sales are missing growth goals. But then we seen them later on in the day basically walk that back. But if we come over and look at Microsoft real quick, and this has a lot to do with AI and everybody's saying AI is in a bubble, myself included. We scroll this back real quick and notice Microsoft was not able to go all the way back up there, filling the gap from today. And it really looks like Microsoft wants to roll over, taking out the session lows. Now, if we compare that with the SPY this morning, right here was the open. We gap down, we double bottom, we rock it up. But I want you to pay very close attention. With the SPY today, it was up 0.33%. But then we look at the RSP. RSP is going to be the equal weight S&P 500. It was actually up 0.77%. You can see RSP actually was gapping up when we saw the SPY gapping down, and that is all in part to a lot of the Mag 7 stocks, the high weighting stocks in the S&P 500 simply were coming down on that Microsoft news. And that's something that we talked about today on the live stream. Now we come over and look at how the indices fared across the board today. The Dow was up 408 points. The NASDAQ was up 40 points. S&P 500 up 20 points, with the Russell 2000 being up 4.45. But then we come over and look at advancing issues versus declining. We had 70% of stocks advancing on the day and 26% actually declining. Now, if we come out here and we look at the sectors across the board, we only had one sector in the red, and that was utilities. Now, technology was very close to being red. However, it was still able to be green at 0.01. Energy was a big winner out there. Now, you would think with the majority of the stocks being in the green today and almost every sector in the green, that the fear and greed index would be moving up much more substantially than what it did. Right now, we had the fear and greed index sitting at 26. The prior reading was actually 24. Now, I've been saying this for quite some time. The economy is not nearly as strong as everybody believes. Today, we had the ADP non-farm employment numbers come out, and it shows it unexpectedly fell by 32,000, led by steep small business cuts. And if we actually go down and we look at what the report actually shows, you can see right here, sheds 32,000 jobs. So where the market was actually pricing in 5,000 jobs, we actually came in minus 32,000. And we scroll down here real quick and we actually look at the report a little bit. Look right here, small businesses dropped 46,000 jobs, and that is businesses 1 to 19 employees. 20 to 49 employees dropped 74,000 jobs. However, mid-sized businesses, 50 to 249 employees and 250 to 499 employees, both of those rose, and large companies also rose by 39,000 jobs. So it's really the small businesses that is suffering in this current economic environment. Now, tomorrow, we are not out of the woods yet because we look at the economic calendar. Tomorrow at 7:30, we have the Challenger job cuts coming out. And then at 8:30 a.m., we have the weekly unemployment claims coming out. And why I think traders should pay so close attention to this is we don't have any NFP data coming out on Friday or even on the 12th. We're not going to get the non-farm employment numbers until the 16th. And that will be well after the next FOMC meeting, which is slated to come out 6 days and 21 hours. And the market is essentially pricing in an 89% chance that Jay Powell and company will be cutting rates out here. Now, I want to bring up a pattern for you guys that actually played out this morning. If we come over and look at the futures markets real quick, notice here's that nasty down candle when Microsoft leaked that information, something about the sales quota, and then it comes out to be, it was just fake news. Look at how fast we came coming down right there on that 30-minute candle, which is right around the 9:30 open is the close of that candle. And then we end up reversing that back up. I want to go ahead and show you at a time when we're coming down over there, what was the RSP actually doing? Well, if we look right up here at 9:30, RSP was already screaming to the upside, giving us a heads up that watch out, we are likely going to get some type of bounce in this market. And something I kept harping about all day on the live stream was the fact that if we get above 50% of this candle, we are likely going to undo the entire candle, which we did. And today we were also able to finally take out this untested point of control. So now we got to ask ourselves this question. Was this nothing more than a double trap? You can see right here, they sliced it down. They trapped them down here. Are they about to trap the bulls once again? Because as we look at this 4-hour candle, we are right here near the upper part of this consolidation. So if we start coming back down, watch out. That's when some of these other key levels to the downside could really start coming into play. Now, as we come over and look at the volume profile levels real quick that we'll be dealing with for tonight, we have value area high up here at 6870.75. We have the point of control at 68.62 and then value area low will be all the way down here at 68.43. Let's do a simple approach on this. If the market's trading above 68.70.75, I really want to focus on buy side trades. I want to focus on the market to continue to go ahead and push higher. And if you're a trader that's actually trading the SPY versus the S&P 500 futures markets, where are some of the critical levels going to be over here? Because today we had to go ahead and grab the Fibonacci retracement tool and move it up as price came up and made a new high. However, we still have not taken out the swing point over here. However, it was very, very close. We only missed it by a few ticks. Well, if we come over real quick and we look at some of the gamma exposure levels, you can see we have a lot of gamma exposure right here, right around 685. And if we look at the closing price, we closed at 683. So what can we expect? If we can get above that 685 price point, then the next area I want to watch is right here, right around 690, 691, but then turn our attentions all the way up here towards 700 as we have a lot of gamma exposure. And that would be enough to not only make new all-time highs, but that would probably put the cash market right around that juicy 7,000 price target. But I do want to bring to your attention, if we start trading below 679, that'll open up the door to some lower prices down below us, 670, 661-ish, and maybe all the way down here towards 650. So it's going to be very critical. Keep in mind, last week we had several gaps which have not come back and been filled. We only were able to fill one of those gaps so far this week. Now, keep in mind, the 38% retracement is almost dead on the high volume area of the composite profile at about 670.93. Now, if you find yourself struggling in today's market, then you might want to go ahead and check out Tradeify. They just released a new plan, the select plan. The trader gets to pick, do they want 5-day payouts or do you want the potential for daily payouts? Take advantage of that offer. Use the link in the description box down below. Use code Mike at checkout. Now, I also want to come over real quick before we look at the NASDAQ. What about the volatility index? Today, the VIX was down 2.96%. If we look at this on the 5-minute chart, you can see it started trying to firm up towards the end of the day. And actually, let's rewind real quick because I forgot to mention something when we were talking about the SPY. Over here on the 30-minute chart, what did I warn you guys about in yesterday's video? I said, watch out, the MACD indicator is getting close towards the zero line. If we stay up and around this area, that could be doing nothing more than setting up for another leg higher in this market. But if we start getting back down into this range, and more importantly, if we start really breaking this minus development area anywhere from 683.40 down here to about 683, then watch out, we are probably going to go lower. And that's when some of those lower GEX exposures will really come into play. Now, if we come over and look at the dollar index today also basically validating that pattern we've been talking about. Top number one, top number two, we have now been able to break below the lower swing point. So now let's go ahead and map this out real quick. Where is the target for the dollar index? That would put the dollar index all the way down here at about 97.58. And if the dollar index is going to go that much lower, what do we think the implications are for gold? Keep in mind, on gold, we still have this ABC target to the upside at about 43.43. Today, kind of a doji-ish looking candle, wick on the top, a wick on the bottom. And early on, gold was just a rocket ship on the way up. Ultimately, though, it ended up failing. You can see early on, gold was just rocketing, little double top action, and then started to roll over. So we got to ask yourself, if your guys are actually trading gold out here, is this pattern up here going to end up being a busted pattern or not? Keep in mind, the pattern would still be valid even if we go back and forth in this area, unless we break all the way down below 39.97.3. As long as we stay above that, that pattern could still be in play. Now, if we come over real quick and we take a look at the NASDAQ, the QQQs, notice the NASDAQ today was able to just barely go a little bit higher. So we need to go ahead and grab the Fibonacci retracement tool and just move it up here just a bit. Once we get that turn in place, we'll have more solid targets that we can use to the downside, because then we can clearly map out where that whole leg is going to be, go ahead and play out. Now, if we look at this on the 30-minute chart, Notice the MACD indicator is kind of flatlined out there. And on the 4-hour chart, kind of similar to the daily chart, MACD indicator is still looking strong at this moment, showing no signs of weakening. But it's going to be really critical. If we start coming back down, and I'd say on the NASDAQ, we get below 621, watch out. We're probably going to come over here, filling the gap at 617.19. And then we can work on some of those other gaps and potentially coming down and taking out some of these Fibonacci retracement levels. Now, if we come over, look at some of the gamma exposure levels real quick, you can see we have a lot of GEX exposure above us. And one of the levels that I'm really watching where we're at right now is going to be right up here, right around 625 or so. Well, if we look, we're actually closing at 623. So 625 is just a bit higher. We start breaching above that, then I really want to turn my attention kind of towards this gap being filled up here at about 632.14. And then from that point on, we're probably going to see new all-time highs in the market. Now, when we come over, look at the 4-hour chart real quick. You can see we had that push up, basically a consolidation up and around this area. But then we come down, look at the daily profiles on the 30-minute chart. Notice we had one heck of a rejection off these lows today, basically spiking this wick right over here. We had a good volume profile rotation down, another one on the way back up, and we were unable to do that entire down candle. And as I look at this chart, I'm simply kicking myself in the butt because on the live stream, I was long down here near the lows in the M&Q contract live on stream. I killed the trade early. I was a little bit nervous about it. And even though I thought we had a good chance of undoing that entire candle, I just didn't have what it takes to hold it for the whole move on the way back up. Now, if we look at value area high, that's going to be up here about 25,681.75. So tomorrow, if we are trading above that, I want to limit how much I'm willing to be on the sell side of the trade. I want to try to hold that back here just a bit because some of the things I'm going to be paying attention to tomorrow is going to be where are the gamma exposure levels? This morning, we talked about this. As long as we are above the HVL, I want to look for the market to go up towards GEX 5 and then potentially all the way up here towards this call resistance, which we just fell a little bit short from. So tomorrow on the live stream, we'll see how these levels update with a better line in the sand. Now, if you guys enjoyed today's video, do me a favor, smash the subscribe button down below and give the video a big thumbs up. And if you want to make sure you don't get your payout denied from Apex Trader Funding, then you want to make sure you check out the rules that I go in detail in this video.